Greetings, algo artisans. It is Strategy Saturday, and we have an excellent strategy here. $3,000 profits within 2.5 weeks. Is that even possible? We're going to take a look at the charts right now. Quick reminder that nothing we say in any of our videos, work, or website is to be used or construed as investment advice. Please consult a licensed investment advisor before risking your money on the markets because you can lose your money. It's risky. Okay, so this is a really simple strategy. There are some things we have to do with the indicators, some ways we have to manipulate them. So let's go ahead and start with that. This is a 2-indicator strategy. And before we get too far into it, there are some other strategies I use to actually boost these gains way up. But in this case, you're gonna see it all. Let's go ahead and talk about this first indicator. You see these lines on the screen, green and red. This is actually not what this usually looks like. This is the super trend indicator. I've changed the indicator time frame away from the chart time frame. So usually the indicator time frame is gonna be the chart time frame. If I just put chart on the top here, this is what super trend is gonna look like, right? Nice and clean, see how it works. However, what I wanted to do was to have this be a little bit less sensitive. And so I changed it to the 30-minute time frame, and that way we have a lot stronger and more accurate of a trend over time. And this just gives us a chance to make our entries and take our profits. Now, the stochastic RSI on the bottom here, that's going to be just your defaults. Of course, you can go and experiment and change the settings, and the same can be done with the super trend. So I do recommend that as you go through, you do that. You test the settings, you see what works better for you. And over at algofactor.tech, I always teach people that you have to backtest for every different time frame, even on the same asset. You have to do a complete backtest for, in this case, the euro versus the dollar on the 5-minute. And if you change that to the 30-minute, then you have to test that in a whole new bit of data. Okay, so we're going to do a very quick backtest after I explain how this strategy works. So now that we have the indicators set up and understood, the super trend is telling us with its color whether that trend is bullish or bearish. And in most cases, that's going to be the strongest right after the initial move. So as soon as this trend changes, where you see it says sell right here at the top, the next trade that we're going to take is going to be, for the most part, the most effective. It's going to have best numbers. So how does this work? This is extremely simple. This is a very simple strategy. What we're going to do is we're going to let the super trend change, and we're going to let that candle complete. And the next thing we're going to do is let the stochastic RSI go all the way into the overbought area. Now, normally with stochastic RSI, if I'm really going to play this without using any other indicators, I actually wait for the stochastic to cross this center line before I'm going to say that price is bullish. However, we're combining indicators here, and this super trend is telling us that the higher trend is bullish. Therefore, I can actually look for the stochastic RSI to head down into this area of the oversold, and then wait for it to flip, and then get into the trade right there. That's the advantage of combining these indicators. We can do things a little bit earlier than usual. A lot of people with stochastic, that's how they always trade. They wait for it to go into oversold, and they think they're going to get a win by going long at that time, or the opposite. They'll go into overbought. For example, right here, a lot of people will enter a trade. They'll go short as soon as price goes into this overbought zone, but you can see with this particular trade, that's not going to work. And a lot of people just do that. They think that's a great way to go, but the reality is that that higher time frame trend was bullish. So of course, we're going to take advantage of that data, and we are able to enter as soon as this hits here, and then we can just take a trade. So let's talk about how we're going to do our setup, our stop loss, and our take profit. Well, first of all, we're going to enter on the candle after this crosses down here. This stochastic RSI blue crosses above the orange, the K over the D, they say. So as soon as that happens, and the candle after that candle closes where it has done that, we actually enter right there. So the corresponding entry, I'm going to get rid of the stochastic. We don't need it. At that point, we already have the data. That's where I'm going to enter. I'm going to use my long box here. I'm going to enter on that candle because that is the candle after the flip. My stop loss is going to be below the most recent major structure, which is going to be down here. So it's going to be right below that. Not very, it doesn't have to go too far, just enough to cover the spread. And in this case, I'm going to be doing 2-to-1 risk to reward ratio. So I go ahead and move this up, and that means that every time I put in $500, if I win I make 1,000. If I lose 500. In this particular little example right here, I have made $1,000. I risked 500, price went up twice as high as my stop loss, and this is how the trade goes. So for the short setup, let's find one. First, we have to find where the super trend goes bearish, and here it is right there. And then we have a short setup right here where the stochastic goes into the overbought area right there, and we have it crossing right here. Technically, we also have it crossing right here. Either way, it's probably gonna be about the same thing, so we'll be conservative. We'll take first cross. The major structure is way up here. Now, this may not give us the risk to reward that we like. However, the most recent major structure to the downside is pretty far down. In fact, it would be a 2-to-1 if price were to respect this structure. So I am going to go ahead and take this trade. So now that we have our entry, I'm going to go ahead and get my short box. I'm going to put it right on that candle because that is the candle after the close. My stop loss will be above major structure, and my risk to reward will be 2-to-1, which is going to be a pretty big trade given the depth to that stop loss. This is the formula. And the thing is that we have the ability to optimize these. We have the ability to optimize a lot of things. This is just a bare bones algo, and you can take this and you can optimize it and give yourself better opportunities. But in this case, this is not a winning trade. Win some, lose some. Still up $500. The same is going to happen right here. However, I would not trade this following trade. The reason is because that is a news event. Typically at 6:30 in the morning, there are news events. That trade wouldn't happen, and neither would trades happen normally until price has resumed what it was doing before. So this is actually a decent trade to take right here, where price goes into a bullish trend, and the entry would technically be right about there after the stochastic crossed up after going into overbought. So we enter long. Again, this is going to be a pretty deep stop loss given that this was a news event. I mean, this might be a trade I don't take. We'd have to take a look at the whole picture. However, if we go 2-to-1, which is right here, let's see if this is a successful trade. It looks pretty good. And then we have another news event. So looking at the calendar, oh no, I probably would have taken this trade and lost it, and that's okay. Now, the only way to know if this is successful over time is to do several of these trades. So let's go back to where I've done that. Here we are with the back test. First trade, lost. Did not win this little guy right there. Next trade, $1,000 win. Lost this trade. Lost that trade. 2 in a row lost. So now we're sitting down at negative 500. So if I were trading right now, I'd say, okay, well, I'm going to draw down. But then we win 2 in a row. So now we're at 1,500 in profit. Now we're down to 1,000 in profit. Now we're up another 1,000. That's 2,000 in profit. Here we are at 1,500 in profit, down to 1,000, make another 2,000, up at 3,000. So here it is at $3,000 in 2.5 weeks. Now you can see some of these trades go well beyond a 2-to-1. Some of these winners go to 3-to-1, 4-to-1. There's a lot of that going on. So it might be that expanding my risk to reward ratio a little bit might be a way to do it. Or for example, the stop loss is very conservative. They're after a pretty strong structure or major structure. So there might be a lot of room to move around by tightening up stop losses on that as well. So we are looking at a very basic algorithm with very basic stop losses and targets, still yielding $3,000 in 2.5 weeks. Well, I will inform you that I have created my own separate algo based on this. However, I'm using different stop loss. My entry logic is basically the same. My exit logic is a little bit different. I'm generating way more than this. However, this particular strategy right in front of you, 3,000 2.5 weeks by risking $500 on each trade. Now, this is just a reminder. None of this is investment advice, right? So you need to do your own research and you need to backtest this and find out if this works for you. And you might need to mess with the settings and do so on and so forth. Nothing is guaranteed. I hope this video was helpful. Please come over to algofactor.tech. We teach people how to build their own trading method, otherwise known as an algorithm. You don't have to know how to code, but if you do code, we can put you on the path to where you can build something that trades for you while you're not at the computer. If you just want to trade manually, which is what most people are doing, then that is, of course, something that we can help you do and help you have the capability to possibly extract money out of these markets on a regular basis. And while we do focus on crypto for a lot of these videos, I'm actually primarily a Forex trader, and you got to know that crypto doesn't go forever. It goes for about a year and a half, and then for a couple of years, there's not much going on in crypto. And if you want to be a trader, you're going to want to understand how to really trade, how to put on those big boy pants, because what's going to happen is eventually crypto's going to flatten out, and the meme coins aren't going to be what they used to be, most likely. I've seen it enough times. I've been in this game since 2017. I don't expect that to change. So come on over, learn how to trade. As a matter of fact, we got some pretty happy customers who are already down the path of success in their algo building. Let's hear from one of those right now. And I do hope that you enjoyed this. Don't forget, algofactor.tech. Trade your job, upgrade your life. We'll see you on the next one.